Welcome to the stream. I'm checking in mid-session today. I'm kind of bored, so I'm actually going to talk about another trade on Exxon Mobile that I'm keeping an eye on. Right now, the NASDAQ is not doing very much at all. Tesla is crawling back up marginally. So far, NVIDIA has done pretty much what I have described. It's kind of stuck just above equilibrium price on the 20-day within its descending channel. Tesla has a distinctive signature. This kind of linear V sort of ascending move is associated with selling volatility. So this is put selling that's going on right now. Recall that the 5,000 short puts that got traded on Friday have to be long by someone as well. And whoever's long those 5,000 puts has the ability to sell quite a lot if they would like. Interestingly, right back up into a region where 430 goes just out of the money, which would be a gamma scalp. So anyway, we'll see what Tesla's doing from here. I've actually added on to another trade. I'm long VIX calls on the front month January contract. We'll see. Right now, we're in the phase where the market is attempting to test your resolve by doing nothing at all. This is the emotional side of trading that you have to get very, very good at. I've taken my trades both on NVIDIA. I have my put on Tesla. It's been underwater, but again, as I mentioned in my setup this morning, I don't really care. It will not make or break me. The VIX calls trade is actually much more interesting, and what I'm hoping to get out of NVIDIA is what my primary focus is today. So whether or not Tesla goes my way or not doesn't really matter to me at all. It's a marginal profit or gain either way. So what I actually want to talk about is Exxon Mobile. Exxon Mobile is a stock that I trade periodically. I always keep an eye on it because it is pretty much the largest oil company out there. It's the number one holding of XLE, which is the Spider Energy ETF. It's 21% of XLE by itself. And I keep an eye on this because energy has been doing very poorly overall. It has not been a winner, except early January 2024, which is actually when I entered my first trade on Exxon Mobil, right around 98. My only rationale was that I saw that Exxon Mobil was at a 1-year discount relative to everything else. Looking at the chart now, I see that there is a big order block right here on the monthly time frame. So this is a big institutional buyer that came in, and I can't find my rectangle tool again. Anyway, this is a big institutional buyer that came in and has been, what I realize now, is accumulating Exxon Mobil over the past 2 years. So Exxon Mobil is moving in to a inefficiently delivered large order block that was filled right around here back in the end of January 2024 through February prior to the breakout. This is what I rode. There's a clear inverse head and shoulders pattern here. I actually caught the falling knife. I bought right here based purely on liquidity. I was hedged with a synthetic call, so I was able to kind of ride this out, but I probably, knowing what I know now, should have waited until I saw this, but I still won that trade. So anyway, we are now moving right back in to the zone where big buyers have showed interest in ExxonMobil before. Also at the bottom of this descending channel that has been, or excuse me, ascending channel that has been the dominant price channel for ExxonMobil for the last 2 years. So ExxonMobil has been a mystery to me because I routinely see analyst ratings, banks saying that they're overweight. price targets up in the 130s, and the price action has always just been very strange to me. But now I see why. When you zoom out, especially at a higher time frame, 1 month chart, sorry about the chop, what you see is a very large inverse head and shoulders chart. And we are currently in the sell side liquidity run phase of the head and shoulders, inverse head and shoulders process. So this is back on the 1 hour. This is interesting. We see some indications of obeyance of this long-term channel. This is drawn based on daily and weekly charts. And look at this, the probably algorithmic obeyance that is also probably a trap. Anyway, I don't love energy stocks in general. I don't love Exxon Mobil as a company, but I have to admit that there is upside potential here, more than about 30%, which is that's kind of what I tend to look for on a trade. ExxonMobil actually has a surprisingly good options complex. It's a lot better than you might think. The implied volatility is typically very low, which is bizarre because ExxonMobil, if you trade it on an intraday basis, is actually incredibly volatile day to day, even though its total range has not moved much in 2 years. But anyway, my take on this is that this is a very large institutional order that has literally been taking years to unfold. And as we're moving into the next Trump administration, the talk I hear, and there are people out there on things like Yahoo Finance, talking their book and stuff like that, is that they believe that energy stocks and whatnot will do well because of deregulation and blah, blah, blah. But anyway, this is a trade that I'm seeing, I'm keeping an eye on. I probably would do this with options rather than the equity itself, just because there are other places I'd rather put money. I could get exposure to potential upside here with relatively little risk, maybe with out of the money calls or something like that. Not sure if I'm going to take it or not, but I do see the opportunity here. So that's my midday thought while I'm waiting for something to actually happen on the rest of the market. Thanks. Have a good one.